Alright, should be live on YouTube. Good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial conditions. Positions disclosure, took off the DKS couple swing day trade that I had earlier. I think I had that on last time I was on YouTube. I took that off yesterday. So just pins for now. So tight inside day today. I guess let's take a look at Microsoft real quick. Microsoft is trading up after their report. Overall, numbers are pretty good. Some beats, some misses, but clearly good enough for now. We'll see how they trade it tomorrow. You never know the next day. They also have their call at, I think it's 5:30, and they guide on their call. So we'll see how the call goes. If anyone, is not doing anything and sticks around, I'll probably be hanging around to see how that trades. Because usually when you get these calls and these bigger names move on the call, like this probably dies out over 250, like in between 250 and 253 or so, probably dies out for a while until that call starts from 5 to whatever 5:30-ish, and then it could get moving again. It could have another leg up. They could say something bad and it could totally break down and it could give the whole move back. So we'll see how they guide. We'll see how they trade it tomorrow. Microsoft does have a tendency to sell off / kind of be shaky after reports, even if eventually it's good. What was the last I think this was their last earnings report, this big candle right here. I forget which candle it was exactly. But so far that's looking good. So market's trading up a little bit from that. Let's take a look at SPY. SPY trading up a little bit, not too much. Still not over yesterday's high. Q's did trade up over yesterday's high, not over 291. IWM obviously is not as correlated, but out of curiosity, not doing anything. So today was a pretty tight, choppy inside day. That's for the most part what we were looking for. We had a big 2 days into resistance yesterday, with yesterday's close being okay, but we rolled over a little bit into the close. And still, even closing at 400, daily ADMA this morning was down at like 395-ish or so, up a little bit after today. But just look, it'd be much better. So now that we're at SPY 400, everyone is asking, okay, what's the next move? Is this going to be, what's the next bigger move, basically? Is this going to be resistance and we're going to fail and head back towards 380? Or are we going to be able to make the next leg higher, break this big trend line, move up to 4,100? If we can move up to 4,100, one could argue that could stop out shorts and move us up to even 4,200. That's what I'm asking myself. That's what a lot of people are asking themselves, I think, at this time in the market, is what's going to be like the next 200 handle move or so. So with that in mind, although we're looking good and we're at 400, kind of thinking we probably need a little bit more time / more catalysts before we get that next leg higher to 410. Because just after this 2-day move, even if we were to go higher and break yesterday's high and go to 405 today, if we were going to 405 SPY today, we'd be $10 extended to the upside. That'd be a shortable, right? So even though you want to be bullish and this market's looking good, still got to be a little bit patient, take your time. So for the most part, we were looking for an inside day today, and that's really what we got. I don't think there was really too much to do today. I didn't do too much myself. I don't even really remember the action this morning was just kind of messy. I remember Netflix and Apple being the tech leaders and looking for signs where those might look to be topping out because they're the tech leaders. But personally, I don't want to buy Netflix when it's $20 extended, even though you can make another 2, 3, 4 points in doing that. But so I know Netflix was strong this morning, but that's pretty extended on the daily. Apple was strong this morning, but that's not as extended, but still extended on the daily. So this morning I remember seeing Apple and Netflix strong, saying, okay, those are our tech leaders. they're strong. You want to buy relative strength, but looking at their daily charts, I don't know if I want to really chase that. I'm not much of a chaser myself. That's like, I'm really bad at chasing, so I often miss stuff like that. So those were pretty shaky this morning, but they ended up holding up. Netflix ended up going through highs, grinding higher. Apple, similar, right? This ended up. I remember this like 142. I remember the shooting star came in saying, all right, if Apple is ever able to negate that, and if it's able to do it quickly, it's probably spends the day grinding higher. Looked like it was going to, came back down, shook around, then looked like it was going to break down, but I mean, that's choppy market action for you, right? Looks good, doesn't go, looks bad, doesn't break down, looks good, doesn't go. And eventually, this did just end up grinding up higher. So we spend most of the day grinding higher until this afternoon. Our VVIX phenomenon came into play a little bit, actually. So that, stuff, a little bit of money you could have made on the short side this afternoon, but this is something to pay attention to going forward too, as we head into probably the biggest week of the quarter, arguably, if not one of the biggest weeks of the quarter, which is next week when Apple and Amazon and a lot of the giants report, as well as the Fed meeting on February 1st. And it's interesting too because we've had a lot of CPI. I was thinking about this today. We've had a lot of Fed meetings and CPIs kind of back to back, not necessarily one in front of the other in a certain order, but just for the most part, a lot of them recently seem to have been, honestly, some of them have been like literally back to back, day to day, but pretty close. But this time, the last CPI was, weaker. I forget the exact date for it, but the next one's not until the middle of February, like February 16th. So that's a little bit interesting. They're going to kind of have to use some foresight and whatnot. But so, long story short, big week next week, right? So, market's just kind of setting up in front of that. This afternoon, we rolled over a little bit with the VVIX actually rallying a little bit this afternoon. Didn't close quite at highs, but still closed green. So, just taking a look at the timeline, and I remember doing this last time on YouTube, so even just for my own sake, for my own review, just out of curiosity, let's see. So, SPY chops sideways, pretty much stuck between 401 and 399.50 from like 11 o'clock to, what is that, 3? Yeah, 3. From 11 o'clock to 3. While that's going on, the VIX, not the VVIX, but just like the normal VIX, from 11 o'clock to 3 is bleeding down. So this is when like Netflix and Apple and those guys didn't break down and did break through highs and ended up grinding higher. The regular VIX was kind of choppy sideways this morning, ended up bleeding down, and then rallied this afternoon. But the VVIX, more specifically, bottomed earlier than the VIX and lifted off earlier than the VIX. So just pure timing wise, the VIX bottomed and began rallying at 230 and arguably like negated this bar and turned bullish at 3. And then the VVIX, so like 230 to 3, and then the VVIX bottomed at before 2 o'clock, so over half an hour before the actual VIX bottom, and then this turned bullish also before even 2:30. So little bit of cash flow maybe to be made on the short side this afternoon. Just another example, because people have been asking me lately, like, oh, do you just look at VVIX daily? Do you look at it intraday? For sure, I look at it intraday, and that's a good reason why to. And then to cap that off, it's interesting. So now we have a green inside day. That's a bullish looking day. Like, that's a bullish inside day for sure. 100% technically speaking, that is a bullish inside day. So we have a bullish inside day on SPY, which is up a little bit too from Microsoft now. On the VIX, we have a red day, an ugly red day, right? Sloped down. This, for the most part, bled down today. And then on the VVIX, do we once again maybe already have another little warning signal? Maybe, maybe not. Kind of a hammer. Looks like more of the doji, but still closing green, closing above yesterday's close. So green SPY, red VIX, green VVIX. Potential warning. In a black and white, simply speaking, this is telling me that SPY is definitely not ready to leg up higher to 41, 4200. And, maybe this is a good short over 400. We'll see. That's just like what it's technically saying, though. Again, we have a ton of catalysts coming up. So that's the market in general. That's kind of like what happened today, what we were looking at today, which, bunch of names in the list, but overall trading, nothing really too fantastic. But then, so going forward, again, we just had Microsoft report, which is trading up. We have Tesla reporting tomorrow, which this is obviously down a lot from highs, but the Tesla has had a decent move into this report. From 100 to 140 is 40%, right? And then we also have more data too, a lot more data even before next week. Let me just look. I just had a list here. So like today we had PMI, which was below 50 but better than expectations. But then the Richmond Fed manufacturing, I think, was one of the other numbers that came out. That was an ugly miss. Which, if you guys remember, I think it was last week. There was an Empire State Manufacturing. That was a gigantic miss. So the economic numbers are deteriorating under the surface for sure. So more coming. Tomorrow, Canada actually gives their rate decision in the morning. Thursday, we have the GDP number, some other like unemployment, new home sales. Friday, we have PCE, Michigan sentiment and inflation expectations, pending home sales as well on Friday. And then next week, again, ton of data, ton of earnings. All the big earnings for the most part next week, and then the Fed on next Wednesday. So, market consolidating in a bullish way at big picture resistance, heading into a week or so, a couple week span of a lot of catalysts. And again, everyone's asking themselves. I think that's what a lot of people are asking themselves. That's what I'm asking myself. I think that's what you should be asking yourself as well at this point is, what, I don't know about like 395 to 405 at this point. I don't really care about that. I care about what's the next 100 to 200 points. Are we going to leg up and really squeeze shorts and really get some real buying in and make this move to 4,200? Or is this a good short and, are we coming back down to 3,800 and then, if we're, I don't know, we'll see, right? I could just go on and talk about if thens, but that's what I'm asking myself. That's what I'm thinking about now. And yeah, that's where we're at really. And I know Derek keeps talking about that wedge that's building out too, that you guys can obviously see from like the upper trend line. And then we had the ultimate low, this low that built out at 380. So this wedge is building out too. It's a big tightening pattern on a big volatile market. It might take more time, right? Just because the tightening pattern's building out doesn't mean it has to break tomorrow or the next day. It might take more time and get even tighter. So we'll see. But I think that's all I really have to mention. A lot of things coming up to pay attention to, but today was really, really slow for the most part. Besides that little rally in the VVIX in the afternoon, which is notable to keep in the back of your mind that although we had a bullish inside day today and the VIX closed red, the VVIX did give this, if this was just a stock and you didn't know what this was, you would be arguing that this could be a potential higher low building here. Right? So we'll see how that all plays out. And I think that's all I have to talk about. So happy to answer any questions if you guys have any. I know it was a slow day, and I don't think I mean, I know I didn't do too much. I don't think a lot of you guys did too much either, which is good. These are the days where, as a newer trader, if you're shorting every shooting star and buying every hammer and buying through highs and shorting through lows, like you're just absolutely getting destroyed on a day where there was like really nothing to do. So hopefully no one suffered from that too bad. Let me just scroll up a little in the VTF and catch up on what you guys are talking about. Chat GBT. I keep seeing more and more things about that. I saw it passed like a Warren MBA exam or something at 10 million. Instagram took. Yeah, that's crazy. That's impressive. Hindenburg. McDonald's. Hindenburg did I'm pretty sure they did Nikola. I mean they've done a couple. I'm pretty sure they were the ones that revealed Trevor. They revealed Nikola, I'm pretty sure. Like, and they were, they had the article. Their report was the one that said, "Hey guys, this Nikola truck rolled down a hill. It doesn't drive." I'm pretty sure it was them. So they're definitely decent. They're good. Just reading through the chats. See, John, game plan lesson for me. Took a short on BA, looking for a move down with SPY after it fell at 330. Type stock quickly hit, just a trade that didn't work. Lesson I want to focus on is that since it didn't participate in returning to 11, which was a level throughout the day. Let's take a look at what Boeing did at the end of the day today. So, wow, strong day. Strong stock. Definitely look at the Dow also when you're trading Boeing, because it's in the Dow, as much as you do want to look at the SPY. Like, if I'm trading, a tech stock, I'm looking at the Qs, but I am looking at SPY. I'm looking at everything, always. Just always look at everything. I guess start with that. So, definitely take a peek at the Dow when you're looking at the SPY, which it looks like intraday the Dow was leading. Maybe that would have helped you stay away from that. Kind of like Qs kept going sideways, SPY kept going sideways, and the Dow was actually making higher lows and higher highs and trending higher. That being said, Boeing, yeah, I mean, maybe just even seeing that might have helped you avoid that. Otherwise, John, I would say just the name selection in general too. Like, I'm not sure why you chose Boeing. Maybe you had a reason that I'm unaware of as to why you think it's might go down or is relatively weak or something. But like, if you think SPY is going down, keep it simple and short SPY. Two, if you think SPY is going down and therefore stocks are going to go down, go with a relatively weak name, which off the top of my head today, AMD had the downgrade and Google had the negative news. AMD did not work, and that wouldn't have worked. Google would have worked, though. And Google was trending down this afternoon, too. So if you went with a relatively weak name, that would have paid you. You could have made some money there. So those are my thoughts on that, John. Thanks for... that's like the type of stuff that people should be sharing. Because, hopefully what I just said helps. It makes, like, looking back, it's simple. In the moment, though, when you're, like, actually trading and the market's opening and there's so much information coming in your eyes that you're blind, it can be hard to think, but, like, it's just practice and over practice. Over time and enough practice of thinking these things, you start to figure it out. And just, I want to short something. I think the market's going down. What's relatively weak, stuff like that. You type up Boeing, you see Boeing's relatively strong, you see the Dow's relatively strong. Maybe that's not the one. Or maybe even you see that it's relatively strong, and if the market doesn't go down, that's one to buy. So yeah. Here comes Mike Wilson. I mean, for what it's worth, I like what he's been saying. And he has been making good calls. And again, I've been saying that too. His call for like the market to go lower is their models are based on earnings where he's making the point that basically things are too expensive even if we don't have a recession. Like that's one of the main points he's making, that I think is notable. He's not saying we're going into a new Great Depression and therefore the market's going down. Like he's saying even if we don't have a recession, stocks are still too expensive based on the models that they have, and you've seen the graphs of what those look like. But we'll see. That's what makes a market, right? Can it pass the Series 24, Josh? That's the question. I'll be impressed if it does that. Hey Pat, when the VIX starts to sell hard while the market goes sideways, like it sort of did around one, that generally foreshadows bullishness for the market, right? But there's a certain point where the market goes sideways long enough with the VIX going down, there's actually bearish signs of the market. Yeah, let me finish reading that. Also, when there is discrepancy between the VIX and the market, it's more likely there's discrepancy between the VIX and the VVIX as well. So I'll answer the second part first. Usually, when there's a discrepancy between the VIX and the market, there will be a discrepancy in the VIX, the VVIX, and the market, and the VVIX is usually right. Like that's the signal. That's the early signal. Nothing's 100% for sure, but like that's the one that you want to go with. So we literally just saw it this afternoon. Like the VIX SPY was not doing anything; it just kept grinding higher. The VVIX started rallying at what time? Like 2 o'clock. From 2 o'clock throughout the whole afternoon, it was rallying. Throughout that rally, SPY, you could have been seeing that and seeing SPY grind higher, grind higher, grind higher. That's a discrepancy. UVIXY at the time was also. It's not like this is ripping high or anything. This is bear flagging and looking ready to break down. So that was a discrepancy going on there. And if you went with the signal of VVIX, which was telling you, it was telling you a warning signal, that's what ended up coming to fruition a bit. And then in the last 10 minutes of the day, that also resolved itself a bit because the VVIX then ended up coming back down a little bit at the end of the day, right? Here's your 5 minute, and then VVIX bull flagged, and then actually failed that bull flag a little here. And then that's your little market pop in the last like 10 minutes of the day or so. And then so the first part of your question, when a market, yeah, so like at 1 today, when the VIX started to grind down, say like 12:30 or so, that's when UVIXY broke down. That's when you say, okay, where markets probably, so the upside seems a little bit capped on SPY. That's what we've been saying. So like I'm not thinking SPY is going to go to 405 plus in a big way today, but the VVIX, or sorry, just the VIX in general grinding down, that tells you we should at least hold up. We're at least going to hold up. SPY might grind higher. You might get that infinite bid, but we should at least hold up. So let's go with relative strength. So maybe you don't buy SPY then, but that's when, again, your relative strength, like Apple and Netflix. Apple was kind of struggling with this 142-ish area, and then when the VIX finally broke down at 1230, this still had volatility, but it did go trade higher after that. And same with Netflix. This was kind of struggling with like 362, kind of broke through 362, but then after this 1230 little shake around, that did work its way higher, and that grinded higher until the whole market came down in the afternoon. So then to answer the second part of your first question, so like you see that, you go with your relative strength, and eventually the market SPY should grind higher. So if then eventually, and we've seen it before too, I think we saw it yesterday, I want to say it was yesterday, where sometimes you don't get the VIX rallying before the market tops. You get what you just said in the second part. The SPY is just sideways and sideways, and the VIX is, breaking down, and now the VIX has been bleeding for an hour, and SPY, maybe is poking highs but not really going higher, and then okay, the VIX has been going straight down for 2 hours straight, and SPY can't go up, and it gets to the point where it's not that SPY is overbought, it's that VIX is oversold, and then that's when you get like a sideways market that breaks down. It's judgment calls, right? But so like at 1, what does a 15-minute chart look like at 1 today for UVIXY? So at 1, you get this bear, UVIXY comes down, bear flags, breaks down. Okay, you get that grind, SPY, like that's fair. But then into the afternoon, you don't usually, especially in this market, because it's a bear market, it's a volatile market, you don't usually just get like an absolute perfectly clean trend all day that just opens at the lows and closes at the highs with no shakeout on the 5-minute at all whatsoever. It's very rare to see that happen. So, okay, like you get a move lower in a bear flag, and then you get another move lower, and then another bear flag. And at this point, it's bearish, but that's like, if you're shorting this bear flag down here, like that's chasing. That's kind of being a little greedy. Technically, it should go lower, but I mean, this just spent the entire day going lower with no real shaking at all. And while it was doing that, SPY couldn't move. SPY. Whoops! I just double clicked something. UVIXY VIX went down in the morning, so SPY shook around but was able to be saved and broke up in the morning. Okay, cool. Then UVIXY consolidates and bear flags, SPY consolidates and bear flags. Okay, cool. Then UVIXY breaks down at 1 o'clock and SPY can't break up. And for the next couple, hour and a half, while SPY can't break up, UVIXY's going down. And that's when you get to the second part where, okay, UVIXY, just had a breakdown. It's also like its third breakdown in a row, and then the market couldn't go. And then you get that third little hint of also the VVIX is rallying, and, that's when exactly what we just saw this afternoon, where we kind of just like fall apart a bit. I hope that makes sense, DJ. What happened today made sense to me. If anything, I should have, I hate just like shorting blindly with no technical signal. But I thought about like seeing that VVIX rally and just, I definitely was thinking maybe I should short versus like 402. Just give it some room. Just maybe not versus day highs because they might shake that and grind that. But maybe I should just take some short versus 402. And if I get a pull in the afternoon, just take that cash flow. And I didn't do it, but that's like, it just ended up happening again. It's such a good signal, the VVIX. It really is. Again, nothing's ever 100%, and it's not just, okay, here's the signal, go all in, or anything like that. Timing it can be a little bit tricky, but yeah. So yeah, I hope that all makes sense. Mike thinks we run SPY into the Fed, then another big move after the Fed. Yeah, we'll see. We could break up a little bit if we get enough good earnings reports. But at this point, it's Wednesday tomorrow. The Fed's only a week away. But yeah, we'll see. I do think it's notable though that the VVIX closed green today. It's something to note for tomorrow. Let me just check YouTube for questions. I don't see any YouTube questions. Anything else, or you guys good for the night? Pat, can I speak generally on swinging with leverage? Sure. Good question. In general, swinging on leverage is very risky. Yes. You must 100% respect. You must 100% have a stop, respect that stop, and have a full game plan for the worst case scenario no matter what. And I mean, you need a profit cushion. You don't. I don't want to say like you need, but it's obviously better to have a profit cushion. I mean, it's simple math, right? It's just the more leverage you have, the more your P&L is going to swing, the more money you can make, the more money you can lose in a quicker way. I definitely learned some good lessons about leverage during COVID, where again, that type of crash might not ever happen again, might not happen again for a long time. But that was like where I really saw what leverage can do in both good and bad ways. So yeah, the 1% rule. Honestly, even the 1% rule is a little bit more for the beginners that don't want to swing but don't either, still learning kind of like the market dynamics and what's really going on in the market, right, versus just what a daily chart looks like. But they're still kind of learning the ebbs and flows under the hood of what's going on. But yeah, in general, just it's simple, but like you need to have a stop. You need to have a game plan if something goes wrong. The leverage is there for you to make the money. Like, it's there, right? If an A plus trade sets up, or an A plus idea sets up, maybe the trade's not setting up and an idea is setting up, and you want to build a core or something, that's fine too. But you gotta respect your outs there. And that's where, that kind of ties into when I say, like, trading these shaky markets. If you're trying to trade with size, you got to be willing to respect your stops, but be willing to try it a couple times because the risk reward makes sense. It's the same thing with that. Like, if you want to have a looser out and build a core based on like a daily chart or something, then that's a game plan. If you want to buy multiple thousands of shares with a tighter out, that's fine too. You got to respect that stop though, because if you don't and you're worried it's shaking you out and it falls another 10 cents and then another 20 cents and then another 50 cents and then it's down $1 more than where you should have stopped out, and then you're just in a bad place. So it's the same thing with that. But if the risk reward is there, again, if you're using like big leverage and big size, and a real trade works out where you're getting real 10x plus reward, it's worth it to try it multiple times, right? It's the same thing to that. Yeah, but so being glued, you don't have to be glued to the screen if you have your out and you have your game plan. If you're glued to the screen and like pulling your hair out, you're probably using too much size in general. First of all, I don't know. Like, it's funny how, I don't think it's not that's funny, but just a lot of people really struggle with maximizing their winners. people sell too early and they don't like trail. They don't trim. They trim, but they don't trail all the way. Like they'll just sell it, and it's just practice. It's the same thing with leverage, whether that trailing is on leverage or not. Like just have the stop in, be willing to give it back, and just like walk around, go make yourself lunch, go vacuum your floor or something. I don't know. Just like leave the stop in and just like let it go. Just let it go. Pretend like it's a dog running in the field or something. And eventually you're gonna have a trade where giving it the right trail works and giving it the time works, and all you really did take that 50-cent trade, and risking that 50 cents made you 5 or 10 plus points. And once you see you can do that for yourself, then you can size up, and then you can start doing that on leverage. And it doesn't really matter how much leverage or size you're using, because if you have your game plan, you know what you're risking, the math is there. There's no worries really, right? So yeah, I hope that helps, Nick. That's kind of like a simple answer, but you know, just know what you're risking, right? Like that's all it is. If you're risking more than you're comfortable with, then don't risk that much. It's usually better to risk less and make less, because you're going to be in a better mindset, you're going to be in the flow, you're going to be in the groove. You're going to be scaling up a lot easier. Don't risk what you can't afford to risk. I mean, that's just gambling 101. So yeah, someone had asked me advice for that recently, Nick, and I told them to leave. It's the same thing with when you're like coming off a slump. It's just size down. So like, I mean, if the name's over $100, you can trade odd lots. Like, leave yourself one. I'm not even kidding. Leave yourself one share with the stop all the way down at the day lows. Like, I'm not even kidding. Do it so it's so small. And it's the same thing again, coming off a slump. Trade small, so small to the size where it doesn't matter, but you're still trading right. Sell most and leave such a small amount where you don't even care if you give it all back, because it literally doesn't matter. You're giving back 5% of your profits or whatever, and then just leave it. And then if it ends up working out and closing at the day highs, you're going to be mad that you didn't hold more, but you're still going to say to yourself like, wow, it actually, look at that, I actually worked. So yeah, try doing that. If anyone struggles with like holding winners and they trail too tight and they're always getting shaken out on their trails, try that. One, trail of smaller size with more room, and then two, break up your stops. You don't have to stop out of everything. If you have multiple lots on there, you can stop out of some at one, and you can stop out of some at a looser stop. So yeah, hope that helps. But that was a good question, Nick, on the leverage. It's definitely a good question. I've definitely learned my lessons the hard way with leverage. So yeah, if you're using leverage, if you're using size, respect that out. Respect that out. You can always rebuy it. You can always take that $100 loss and rebuy it. And if the trade works, you're going to make 500 plus, and you're not going to care. But if you don't respect that loss, and you were only supposed to lose $100 and you're losing 500 plus, it's going to ruin your month. It's going to ruin your quarter, things like that. So looks like I got through everything. Where's Microsoft at? Still up, but yeah, pretty flat. Looks like this is pretty much flattening out. So we'll see how the Microsoft call goes, and we'll see how they trade it tomorrow. And yeah, we'll see how they gap us. Again, SPY not over 402, not over, or 402.50, I guess, is yesterday's high. Green VVIX candle, despite the red VIX close. Is that an early warning? Perhaps. If they negate it, then they negate it. So we'll see how they gap us and go from there. Have a good night, everybody. See you tomorrow morning.